The Form 706, otherwise known as the estate tax return, is one of the most misunderstood tax forms out there. Do you really need to file one? The answer might surprise you. Today, I'll walk you through the top reasons why you might need to file, and just as importantly, when you don't need to. We'll also cover what's included in the form, key deadlines, and how to make sure it's done right. And I want to first let you know that I have a newsletter that I encourage you to subscribe to, and we provide great information like this every month for free. Now, here's a disclaimer. I'm not an accountant, and I don't prepare and file estate tax returns. But at Cookman Law, we work a lot with tax preparers, and we want to share this information with you so that you'll be ready if you do need to file a Form 706. So here are the top 3 reasons why you might need to file a Form 706, an estate tax return. Number 1, you have a taxable estate. This means that your total estate is greater than the estate tax exemption during the year that you die. You also need to consider sizable gifts that you've made during your lifetime where you filed a Form 709, a gift tax return. That decreases dollar for dollar your estate tax exemption. Now, I prepared a whole video on estate taxes and how much the estate tax exemption is, and so I encourage you to watch that. Now, the second reason you might prepare and file a Form 706 is that you want to establish the date of death valuations for all your assets for capital gains tax purposes. So with capital gains tax, when you die, everything that you own gets what we call a step up in cost basis. I cover this on my video all about capital gains taxes. So you might want to lock in that value and make sure that there's no debate in the future about how much things were valued at. So you could file the 706 form, which has the asset values at the time of death, and if the IRS approves it, then you can feel comfortable knowing that that is actually the established value. Now note, you don't have to do this in order to get that step up in cost basis. That happens automatically. This is only if you're concerned about the value and you really want to lock it in. Okay, the third reason to file a Form 706 is an important one, and that is if your spouse has died and you as the surviving spouse, you want to elect portability. What does that mean? Well, in 2013 or so, we got this law that says if one spouse dies, then the other spouse can say, hey, I want the deceased spouse's unused estate tax exemption, which we call the DSUE, deceased spouse's unused exemption. The surviving spouse can elect to transfer or port the deceased spouse's unused exemption over to the surviving spouse. So now the surviving spouse has basically double their unused estate tax exemption. Now, unfortunately, to elect portability, you really do need to fill out and file a 706 form. There's no shortened version. I wish that there was, because this seems like an awful lot of work to elect portability. But no, you have to fill out the entire thing and file it. So if none of these 3 things apply to you, you probably don't need to file an estate tax return. That could be good news to you. So what goes on an estate tax return? It really has to contain everything that the decedent owned at the time of their death. So this is every checking account, investment, family business, real estate, retirement account, life insurance, the list goes on. And you need to provide date of death valuations or appraisals for each asset, not just estimates. So we're not talking about some realtor driving by the house and then writing a 1-page letter where they say, I think the house is valued at 1.2 million. No, you actually have to go to a real appraiser and have them prepare an appraisal that you attach to the back of the Form 706. Yes, it can be a pain to collect all this information. So what's the timing for an estate tax return? You need to file it 9 months after the death of the deceased person. But you can file an extension of 6 months. So really it's more like 15 months total. Now, if you're filing only to port that deceased spouse's unused estate tax exemption, that third reason that we discussed, then you can get an additional extension up to 5 years after your deceased spouse had died. Once you file the estate tax return, how do you know if it's accepted and the process is complete? Well, you can request and pay for an estate tax closing letter, or you can get a tax transcript. So who should you work with to prepare an estate tax return? An accountant who's very familiar with filing them and then files many of them every year. Many accountants just do yearly income tax returns. Those are not the people you'll want to work with for a Form 706. It's a very different form, it's very complicated, and you want to work with somebody who knows what they're doing. So hopefully this has provided some clarification on whether you need to file a Form 706, and if you do, some things to consider when filing one. If you're curious about those gift tax returns that I mentioned, those Form 709s, please watch my video on gift taxes, and I'll see you over there.
Did you know that my mom has a monthly newsletter? Subscribe by clicking below.